27 financial reporting of interest in joint venture. Now, joint venture is what? Joint venture is a contractual agreement, contractual arrangement between two or more than two parties. Between two or more than two parties, correct now, which are subject to joint control. Means whenever there is a joint control and contractual agreement, then it becomes joint venture. So there are two elements: contractual agreement and joint control. Contractual agreement and joint control. Understood? Correct. So contractual agreement and joint control, you can read. This is definition part. Now, for accounting purpose, all the joint venture has been divided into three parts. One is known as jointly controlled operation. One is known as jointly controlled asset. And one is known as jointly controlled entity. Now, jointly controlled operation and asset, for this, a separate legal entity is not created. Separate legal entity is not created. But for jointly controlled entity, a separate legal entity will be created. For example, just try to understand. If I say in this way, कि you become CA, I am also CA. So we decided to make one contract. You already become CA. So we decided to make one contract. If from today we'll teach CA foundation. I will teach accounts. You all teach other subject. Understood? Correct? Contract done. And we have a joint control in that operation. But we have not created any separate legal entity. Means no legal entity is created. So it becomes jointly controlled operation. It becomes jointly controlled operation. Understood? Jointly controlled operation, you understood? Correct. Better example I will say, normally it happens. Suppose we both done a contract to construct a road. Now for construction of road, we'll not create a separate legal entity now. Once the construction will over, our contract will over. You will go to your home, I'll go to my home. Correct? So this is short-term contract. So normally we don't create a separate legal entity. So that become a jointly controlled operation. Understood is fine. Have you understood? Yes, sir. Jointly controlled asset means what? Suppose we are both doing any business. Suppose you are also teaching, I am also teaching. This happened with me. Correct now? There was one faculty who was teaching with me. So we purchased one camera jointly. That morning I will record, evening you record. Understood? So one camera we purchased on joint basis. That become our jointly controlled asset. Jointly controlled asset. So for that, whether we'll create a separate legal entity? Never. Correct. Now that become jointly controlled asset. Understood? Now jointly controlled entity means what? Of course, we have done one business of going concern nature. Means that will not be seized in short period of time. Means this is not only construction of road, this is ongoing process. So of course, if we join together, we will create a separate legal entity. It can be either in the form of partnership form, it can be LLP, or it can be company. It can be in any form. So that become jointly controlled entity. That become jointly controlled entity. Understood? It means, can you say, whenever there is no separate legal entity, so we are not preparing any books of account of that joint venture. So if there is no legal entity, there is no question of preparing books of account of that. Correct? In that case, how to record the transaction, that we need to understand. So what our AS27 says, suppose A Limited, B Limited has either JCO or JCA. JCO means? JCA means? So this is joint venture. And this A and B are joint venturer. Are you able to understand? So the AS27 is applicable in the books of AB, or AS27 is applicable in the books of joint venture? No, A and B. It is applicable in the books of A and B. Understood? One second. So AS27 is not applicable in the books of joint venture. It is applicable in the books of A and B. Venturer, investor. For example, it is as simple as whether AS21 is applicable in the books of parent company or subsidiary company. So parent company is an investor now. So AS21 is applicable in the books of parent company. Okay? But the AS23 is applicable in the books of investor or associate? Investor. So here AS27 is applicable in the books of investor A and B, not in the books of joint venture. Are you able to understand? Are you able to follow me? Yes, sir. So now what happened? What they say? Ki this jointly controlled, this joint venture will have asset, will have liability, will have income, will have expense. Correct? Understood? Suppose some asset is given by A, suppose building is given by A, okay? And furniture is given by B. Correct? Understood? And suppose computer is jointly purchased. Jointly purchased. So what AS 27 says that in the books of A, entire building will come because this building belongs to whom? A. In the books of B, entire furniture will come because this furniture belongs to whom? B. But computer belong to both because this is jointly purchased. So suppose the profit sharing ratio is 50:50. So in both books, 50% computer will come, 50% computer will come. Understood? This is the concept. So in the financial statement of A and B, we record their asset and share in the asset which are jointly held, their liability and the share of liability which is jointly incurred, their income and share of income which is jointly earned, their expense and share of expense which is jointly incurred. This is the concept. Concept you understood?
Yes, sir.
Have you understood? I'll just give one example also. But what is given? Jointly control operation. This you read. Reporting of jointly control operation. A venturer. Venturer means A and B, na? Venturer means what? A and B. So A and B should recognize in its separate financial statement and consequently in consolidated financial statement. Can you say whatever recorded in SFS, from SFS it will come where? In CFS? Well, yes or no? Whatever we are recording in SFS, from SFS automatically it will come in CFS, and therefore they are saying consequently in CFS. Got this point? Is asset including its share of any asset held jointly? Is liability including its share of any liability jointly incurred? Is revenue including its share of revenue which is jointly earned? Is expense including its share of expense which is jointly incurred? Understood? Same thing for jointly controlled asset. Its share of jointly controlled asset. Is liability including its share of any liability jointly incurred? Is revenue, is expense. Same thing is given. So jointly controlled asset and jointly controlled operation done, but no question of this nature has been given. But have you understood? From my point of view, they can ask this type of question in exam. They will say, this is jointly controlled operation. They will say, this is asset 1, 2, 3, 4, liability, suppose 5, 6, 7, 8, or you can add A, B, C, D, okay? And they will give you capital. They will give you 1 lakh, suppose 50,000, suppose 2 lakh, suppose 30,000. This they will give 70,000, suppose 80,000, 90,000, 1 lakh. Understood? This type of question they will give, and capital will be the total. So this will tally. Correct. Now in the additional information they will give, this is belonging to A, this is belonging to B, this is belonging to both, this is belonging to both, this is belonging to A, this is belonging to B, this is belonging to both, this is belonging to both. And they will say profit sharing ratio is 50:50. Correct? Then they will write down what will be incorporated in the financial statement of A. But in the financial statement of A, what will become? But the asset 1 will come how much? 1 lakh. Very good. Asset 2 will come how much? Will not come. Asset 3 will come how much? 1 lakh. Have you understood? Asset 4 will come how much? 1,50,000. This type of question they may create. Till now, though, they have not created. See, liability. But the 5 will come how much? 70,000. 6 will come how much? Nil. 7 will come how much? 45,000. And 8 will come how much? This much. Only you need to write down this presentation. They can ask only this much. चले आगे चले. Yes, sir. Now, what is important is jointly controlled entity is important. So for jointly controlled entity, so we are preparing separate books of account because there is a separate legal entity. So suppose A Limited and B Limited has formed AB Limited. AB Limited. So AB is jointly controlled entity and A Limited and B Limited are joint venture. So of course we'll prepare one balance sheet of jointly controlled entity. Correct now? And A will prepare one SFS and CFS. B will also prepare SFS and CFS. Understood? Are you able to understand? Now in SFS, so this will be shown as investment as per AS 13. Chalega. But in CFS, what AS 27 says, we need to apply proportionate consolidation method. Means for subsidiary we apply full consolidation method. For this we need to apply proportionate consolidation method. Means if you have understood full, so you understood proportionate also. Means suppose they hold 40% and they hold 60%. So this asset liability will be how much recognized? Only to the extent of 40%. Means can you say if you are recognizing assets and liability, individual asset, individual liability to the extent of 40%, so where the minority interest will come? In CFS minority interest will not come. Are you getting what I am saying? So just calculate goodwill. Similarly, 40% cost price, 40% net asset, so goodwill will come. Then recognize assets and liability to the extent of 40% only, and then PCF done. Only this much. I'll take one question, but this is only the method. What they are saying, reporting of jointly controlled entity in separate financial statement of venturer investment recorded as per AS 13. In consolidated financial statement of venture should report its interest in jointly controlled entity by using proportionate consolidation method. Proportionate consolidation method. What is the process? Recognize goodwill and capital the same as per AS 21. Means calculate goodwill and capital the same as per AS 21. You can do it. Correct. Minority interest will not be recognized. MI will not come. MI will not come. Intercompany debt will be cancelled, but proportionately. Why proportionately? Because we are bringing proportionate asset and liability. So because you are bringing only 40% or 60% asset, so you can cancel only to the extent whatever you have recognized. So intercompany balance will be cancelled proportionately. Similarly, URP will be also cancelled proportionately. Entire process remains same as per AS 21, but everything will do proportionately. They wish to do 100%. Here will do either 40% or 60% as the case may. Got this point? Okay. This you can read by your own. This is theory question, exemption and discontinuation. This can be asked in theory question. Till now, to not asked. Only this much. Let me take. There are two questions. That type of question can be asked. Till now, to not asked. But let us take. One is this question. Sure, let us read it. A Limited enter into a joint venture with B Limited on 1:1 basis, means 50:50. A new company C Limited was formed for the purpose, and the following is the balance sheet of all three categories. Means A Limited is the balance sheet of joint venture, B Limited is the balance of joint venture, and C Limited is joint venture. Means can you say we'll do A plus C and B plus C? Yes or no? Means in the books of A, we'll do A plus C. In the books of B, we'll do B plus C. We'll not do A, B, C. Huh? Are you getting what I am saying? Bolna re? Yes, sir. Share capital, reserve and surplus, loan, current liability, they have given. We need to prepare A Limited and B Limited balance sheet. Okay. I will only explain A Limited. Correct? Apply common sense. Apply common sense. Okay. Now, first asset. Can you say PP will come 30,50,000? Plus 50% of this, बोले yes or no? करो total. Total is what? 40,25,000. जादू. Correct? ठीक है. Can you say investment will not come? But goodwill will come. We'll calculate goodwill separately. But current asset will be 2 lakh plus 50% of this, how much? 2 lakh 25,000. Done. Correct. Done. Now coming to liability. Current liability will be 4 lakh plus 50% of this, how much? 4 lakh 50,000. Correct. Loan will be 3 lakh plus 50%, how much? 4 lakh. Understood? Now, share capital will be only 10 lakh. C limited share capital will not come. So 10 lakh. Correct. And can you say this will be 18 lakh plus post acquisition profit? So we need to find out post acquisition profit. Correct. Now we need to prepare one working note. Working note. Correct. Okay. Now they have, because nothing has been given in the question, what is the date of acquisition? You can see nothing has been given. What is the date of acquisition? Nothing has been given. So I will say it has been assumed that shares was, this joint venture was at the beginning of the year, and at the end of the year we are preparing CBS. Correct? Have you understood? Now let us say. So what is the cost? What is the investment cost? Price of investment is given 2,50,000. So we write down 2,50,000. Can you say we'll do minus net asset on the date of acquisition? So what is the equity share capital? Equity share capital 5 lakh. Equity share capital 5 lakh. Understood? And can you say in this we'll add pre-acquisition reserve? Pre-acquisition reserve. So if you assume this is on the balance, this is the closing balance, and opening balance is not given, we'll assume opening balance is nil. Opening balance is nil. It means pre-acquisition reserve is nil. Pre-acquisition reserve is nil, and entire 12 lakh is post-acquisition profit. Entire 12 lakh is post-acquisition profit. So can you say this become nil? So total net asset is 5 lakh. What is 50% of this? 2,50,000. Therefore, goodwill is equal to 0. Therefore, goodwill is not coming in the balance sheet. They have not shown this working note. I am explaining this working note. Okay. Now, what is your pre-acquisition reserve? 12 lakh. It is 12 lakh is pre-acquisition, sorry, post-acquisition reserve. So 12 lakh ka 50% how much? 6 lakh. So 18 lakh plus 6 lakh how much? So 24 lakh is coming here. Look, balance sheet prepare. Same thing we can do for B limited. This question may come. I don't know what is the chances, but this is an ICA study metric question. A good question, I will say. If they will ask same to same question for 5 marks, 6 marks, whatever. If they ask only for A, they will not ask both, I think so. But there is one very good question I would like to explain. This question actually is not of CA inter level. This question is of CA final level. But because it is given, so can be asked. Apply your common sense. A and B establish a separate vehicle, that is entity J, wherein each operator has 50% ownership interest and each take 50% of output. On formation of joint venture, A contributed a property with a fair value of 110 crore and agreed to contribute his experience over the year toward the venture. And B contributed equipment with a fair value of 120 crore. The carrying amount of this asset is 180 crore. Have you understood the question? Well, A, B has started a joint venture. A has contributed an asset whose carrying amount is what? 100 crore. And fair value is what? 110 crore. Understood? Correct? And B has contributed one asset whose carrying amount is what? 80 crore and fair value is what? 120 crore. Understood? It means, can you say in this joint venture, let us say this is asset 1 and this is asset 2. So asset 1 will come at 110 and asset 2 will come at 120. Now just try to understand. If A has contributed an asset to joint venture, but can I say they have 50% right on this? So it means even though they have transferred this asset, 50% belong to whom? A only. Means can I say they have transferred only to the extent of 50%? They have only transferred to the extent of 50%. And similarly, this 120 is transferred by B. So B has transferred, they have also transferred to the extent of 50%. Now they have asked you to calculate, gain or loss for A and B. Gain or loss for A and B. So can you say, just try to understand, whatever asset has been transferred by B, now 50% of that asset belong to whom? A. It means, can I say in this way? Can I say in the books of A, fair value, in the books of A, fair value of asset will be recognized which has been transferred by B. How much? How much what? 120 ka 50%? 120 ka 50%, 60. Correct? And can you say they will de-recognize the asset which they have transferred? But the de-recognition will be done of carrying amount or fair value? Carrying amount. So they have transferred which asset? This asset 100 lakh. So this will be now de-recognized, but only to the extent of 50%. Only to the extent of 50%. So can you say will de-recognize less carrying amount of the asset which was transferred by A is how much? 50. So this will be recognized. This will be de-recognized. So what is the gain? Gain is 10. Gain is 10. 2 marks MCQ question. Same thing you can do in the books of B. B you do by your own. A I have done. B you do. Have you understood? You have calculated. So can you see they will recognize 110 ka 50%. So 110 ka 50% how much? 55. And they have transferred which asset? Whose carrying amount is what? 80. So 80 ka 50% how much? 40. So what is the gain? So in their books their gain is 15. For 2 marks super question I will say. But should not be asked at CA inter level from my point of view. But you have understood math wala question AS22. I say it should not be asked, that was asked. So this will be also asked. Correct? Now whatever I say it will not be asked, they ask. But should not be asked. This is actually CA final level. We teach at CA final level entire concept. Okay? But have you understood now? Easy. If you can recall, it is easy. Done. AS27.